Hey guys, welcome back to thetradinganalyst.com. This is Taylor. We're going to be discussing a lot of things in this video. I'm going to start with just kind of what we know as far as the bad stuff that's going on. Then I'm going to discuss the good stuff. I'm going to talk about and show you some important charts that I think are going to be important moving forward as far as signaling whether the market's going to head higher or lower or sideways from here. I'm going to discuss oil, Apple, Amazon, and then at the end of the video I'm going to give you a couple of potential trade ideas where you can capitalize on the movement that's going on in the market right now. We've been doing quite well ourselves here at thetradinganalyst.com. With the alerts we've been sending out to members, as well as I also manage money for people, and we've done quite well. While the market's been heading lower, we have been making positive returns, which is some people are doing that, but most people have been losing money in this down market. So let's start with what we're going to talk about. So what we know, this is the bad stuff. Okay, so right now we're still in the eye of the storm for the coronavirus. I myself am not really too concerned about the coronavirus. I'm not going to get too much into that because I know it's a hot topic. But we're still, as far as the general consensus and what's going on, because that's what matters. It doesn't matter what I think. It matters what most people think, because that's what is controlling the stock market, and that's what we care about. Okay? So we're still in the eye of the storm. The country is set to be shut down through the end of April. So we've got basically an entire month left of this shutdown of the country. Most businesses are either shut down or running a skeleton crew. Restaurants are doing to-go only, yada, yada, yada. Okay, nobody's traveling. So that's going to be through the end of April. As you know, this can change and has changed before. For example, just like a week ago, Trump was saying, or maybe it was 2 weeks ago, something like that. Trump was saying, he's expecting the market to be, or the country to be back open and running normal and smooth by Easter. And then just a few days later, really, he said, okay, actually I'm extending it through the end of April. Okay, so we know this can change. Maybe he'll surprise us and next week he'll open up the country. We don't know. Maybe when April 30th comes around, he'll actually be like, okay, we're going to extend it through June, through the end of June. We just don't know, okay? But what we do know is right now, we are in the eye of the storm, okay? It's still going on, and I don't necessarily see the light at the end of the tunnel just yet. I know it will end. I just don't, and I know you all know this will end, but we just don't know yet when that will be. Okay, it's up in the air. As far as the economy, okay, and the economy does have an impact on the stock market. Okay, unemployment numbers are at record levels. I mean, we're at like the last week's unemployment numbers were, I think, 8 times greater than they ever were before, and we're talking about 8 times worse than the financial crisis, 2008, 2009. These numbers are way, way worse. Okay. Another thing that we know too is that many businesses will not be able to survive through the end of this. Okay, a lot will be able to survive, but I don't know if you understand, many businesses, even ones that you see out there that are are thriving and like a restaurant. And so many people go there. I have a neighbor who owns a very, very popular restaurant, and they have two locations, and both of them are pumping all of the time, okay? And you'd think that a restaurant like that would be able to survive through this coronavirus shutdown, okay? But their one location doesn't have anybody going into it, so they completely shut that location down right now. Their other location, barely anybody goes in there right now, all right? So they are worried about surviving through the end of April. They don't know if they're going to make it, okay? And that's just one person, okay? And this is a thriving business. So there will be businesses that will shut down, all right? I live by a tourist town. I'm like a road up from this tourist strip where basically the only people that go there are tourists, and it is literally completely shut down. Nobody is even open or doing to-go orders or anything like that, and that's been like that already for maybe 3 weeks, and it's going to be another month. And these are tiny mom and pop shops. Again, a lot of them are not going to make it. They can't. They're living month to month already, and then when you throw a shutdown in, many of these people are working in their own stores, so they can't save money by not paying their employees because they're the ones working there. Anyways, I digress. A lot of people are not going to make it through this coronavirus shutdown. Okay, so the good. Okay, what we do know. And this is all of what we know. I'm not talking really about hyperbole or hypothetical situations. This is just what we know. Okay, so we know the good. The stock market action leads the economy. Okay, so what I mean by that is, for example, when we dumped 40% in March on the stock market. That was well before we knew that the country was even going to be shut down. That was before we knew there was going to be a recession or that the unemployment numbers were going to be bad or anything like that. Okay, 40% decline happened before any of that happened. Okay, so the price action in the stock market leads the economy. And just another example is that in 2008, in December of 2008, is when we officially went into a recession. Okay, a recession is 2 quarters of declining GDP. I think that's the only requirement. I forget, but it doesn't matter. But December of 2008 is when we essentially announced that that we were in a recession. But by that time, everybody knows that we're in a recession. They've been feeling it. And so, for example, and just to show you, the market bottomed soon after that. Okay, the market was already trending up in March of 2009. So just a couple months later, the market was already pumping higher in 2009. So, when we officially go into the recession is when maybe you might want to be looking for a bounce. And so, quarter one likely going to be declining GDP of the U.S. Quarter number 2 ends in June, and that is when likely we'll officially go into a recession. But everybody, you know that we're in a recession. Everyone feels it. We've got record unemployment numbers. So by the time we officially go into a recession, that's probably when the recovery is likely going to start. So the next point here is as soon as the country opens back up, obviously many people will be hurting, like I mentioned before. Many businesses will be have to go under. But at that at that point, we'll know that most likely the worst is over, okay, and that the recovery will start, all right? Because right now, again, like I mentioned, we're in the eye of the storm. There's a lot of uncertainty. We don't know when the country is going to open back up for business. But once the country does open up for business, we're going to have some sort of clarity. We're going to know. Right now, everyone's in panic mode. They don't know when stuff is going to open back up. But once we do open back up, obviously things are going to still be bad, but we'll have some clarity. Businesses will open up, and things will start to get better. The last point here, as far as what we know, the Fed has done even more stimulus than they did in 2008, and they said they're willing to do more. They said they're basically planning to do more. So they're starting. They started QE again. And if you don't know, QE is extremely bullish for stocks. They started it in 2000, either late 2008 or early 2009. I forget. And that was a major part in the boom of the stock market after the financial crisis. So once we can get, people other than the Fed buying stocks, then I think it's going to do really well. So let's move on to more about the market. Okay, so I'm going to discuss some charts here. All right, so the generals of the market, Apple, Amazon, etc., are holding up relatively well. All right, so let's take a look at those right now. So first, I kind of want to explain what I mean by holding up relatively well. I'm not saying that the market is going to bounce right here or anything like that. I'm just saying that right now, major stocks like Apple, Amazon, Google, I'm going to discuss all of them, are holding up relatively well. And even if they dip quite a bit, they're still just going to be retesting their March lows. And even if the market makes a new low, I think that it's somewhat likely that these stocks won't make a new low. Okay, and that can be kind of a sign that you can look for a market bottom. If the market dips below the March lows, but Apple and Amazon and all them don't dip below their March lows, that's going to be a sign that you want to look for. But right now, please do not misunderstand what I'm saying. I'm not saying the market is looking like it wants to bounce now. I'm just talking about kind of a longer term perspective. So it's very, very clear that I really want you to understand that, okay? Because right now, Apple is still below even the 20-period simple moving average, okay? You can see went below it here, and then it got rejected there, rejected again. We're still below. Even if we're above that, that's not going to be some kind of major buy signal. I'm just kind of saying that it's still even below its short-term moving average, okay? So just pointing that out right now. But let me point out from a longer-term perspective, here is the breakout point that we saw in 2019, right here. Big breakout over this resistance. Resistance here, there. We broke over it here, and then a huge dump all the way, and look at where we bounced in March, right here. Huge hammer off of that low. Now, what I want to point out too is that we're about 40 down here, like 210. We're like $30 away from the March low. So what that means is we could take a big dump here on Apple and still be above this breakout point. Okay, and at this point, all we're doing is retesting this breakout point. All right, we're retesting that breakout point. Many stocks are below their breakout point, but Apple bounced at that breakout point. So really, this is just a normal retest of that breakout point, and to me, not acting obviously, this is a big dump, but not acting super bearish just yet. When you want to get, I don't want to say worried, but when you want to start to look for further weakness, it would be if we close and hold below 220. Okay, not a daily dip, because we could dip down here to this low again and then bounce. I'm talking about a daily close below like 220, 210. To me, that would signal that maybe it's not going to bounce at this point. But as of now, and I'm talking about what we know. Okay, I'm not talking about hypothetical situations, but what we know right now is we're still well above that level. So if the market takes another dip, which is very, very possible, the market is in a downtrend right now, okay? Bears are in control. Let's be very, very clear about that. But if the market takes another dip, Apple has a lot of wiggle room, okay? And Apple is a big, obviously, mover in the market. Okay, let's take a look at Amazon. Amazon is, even better. If you look at short term, Amazon is above the 20 period moving average. Okay, I don't know if it's going to hold above it or anything like that, but Amazon is pretty close to the previous all-time highs that it made right there. It didn't take as big of a dip, and we rebounded much bigger than other stocks. As you can see, it's above its 20 period simple moving average. The market isn't even above the 20 period simple moving average. So if you look at, for example, the 2-year chart, all right, 2-year chart, we could take a big dump here, going down, $300, and we'd only be retesting the March lows. So again, just like Apple, if it takes a big dump, we have so much wiggle room right here. So much wiggle room. So bottoms typically in major bottoms. I'm talking about major bottoms like 2003 after the dot-com bubble and 2009 after the financial crisis. I'm talking about major bottoms after bear markets. They don't V-bottom up. They oftentimes have a lot of sideways trading before heading higher. So what I'm saying here is that Amazon could kind of chop back and forth right here for a while, and it'd still be overall long-term bullish. Now, just like I discussed with Apple, with Amazon, when you want to be worried or more bearish, is that if these March lows get broken. Okay, so if we close below like 1630, something like that, then you want to be saying, okay, maybe this bear market is going to last a little bit longer. Okay, but right now, even if the market takes a huge dump and Amazon takes a huge dump, we'd still likely just be above this level right here. Okay, so that's what you kind of want to be looking for. These stocks, these major stocks, could already have put in their bottom. It doesn't mean the market has bottomed yet, okay? But this is the first sign, is when the leading generals are holding up relatively well. For example, too, is that another thing that I want to mention, too, is that most stocks are below their 2008 lows. But these stocks are well above them. For example, we had a bear market in 2018. Oh, did I say 2008 before? I meant 2018. So here is the 2018 low. Big dump right here. It was a 20% market decline and about a 20% dip in Amazon as well. It's all the way down here. All right. Amazon, even after this huge 40% dip in the market, is still way above its March lows, or its 2018 lows, okay? So, we're still making higher highs and higher lows, okay? Here's a high, higher high. Here's a low, here's a higher low, all right? So, that is a point to be looking at here for the market. So now let's take a look at Google. So I'm going to take a quick drink of my special immunity boosting drink. Electrolytes, lemon, salt, vitamins, vitamin C, yada, yada, yada. Anyways, so Google here, not quite as good as, let's say, Apple or Amazon. For example, here was that breakout point that we had for the breakout in 2019. Boom, 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 resistance, resistance. We break over it here. We come down, and we're below that right now, okay? Not the end of the world, but just another sign that Google, to me, doesn't look quite as good as Apple or Amazon. And if you notice, too, Google didn't really bounce as well as, let's say, Apple or Amazon. As you can see, we came down here, and it barely made any kind of a bounce. You don't remember, look at Amazon, for example. Here's that March low, and we're like $300 above that. Conversely, look at Google. I mean, we barely bounced right there. So Google, not as strong as Apple or Amazon, okay? But let's point out we have that resistance above, but we're still above this pretty major support, all right? So here's the bullish case for Google. And again, I'm not really discussing these charts for their individual purpose. I'm discussing them in relationship to the entire market. And I'm discussing them because these are the generals, these are the biggest companies in the world, and they have a bigger impact on the future direction of the market than any other stock out there. So anyways, here is, I'll move my face out of the way so you can see that level. So here's that support. 2018 lows, boom, boom, boom. Here it is again, right here. We're well above that level right here. So we could take another dump down to this support and even kind of have a big intraday dip below it and then close back above it. But the point is, we're still above this major support. Now again, just like with the others, if it breaks and holds below that support, that is when you want to be thinking maybe the market could head lower. But right now, we are above that. So even if it heads lower, we could bounce at that level right there. Okay? So the next one we'll take a look at is Microsoft. Okay, so here we go, big dip at Microsoft, and where did it come into? Just this big sideways support range right here. Okay, still making higher highs, and this is still a higher low than even there, and here, and here. All right, so we bounced off that level, and if you zoom in a little bit, with Microsoft, we are actually above the 20-day simple moving average. All right, the market is below it, but stocks like Amazon and Microsoft are actually above it, and that's because they didn't take as big of a dump, and they bounced at support. So again, what I'm saying is not that Microsoft is going to catapult higher right now, but just that it's showing early signs of little bits of strength. Okay, again, I don't think this market is done just yet. I don't think it's ready to head higher just yet, but these are some of the early signs that you can be looking for potential strength in the market. For example, in 2008, a lot of these stocks like Microsoft, Amazon, Apple, etc., they were all made their bottoms in like November or October of 2008. Okay, this was months before the actual market made its bottom. Okay, and essentially Apple and Amazon and all these major stocks they made their low months before the market made their low, and they kind of just traded sideways and chopped for a little bit. And then once the market was ready to head higher, they broke out of that consolidation range and the market looked like a V bottom, but these stocks were already coiling up really tight and resting. They already made their bottom months before, and then they just kind of rested within this really tight range. Boom, 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 back and forth. And then they were ready to head higher. So I think something similar could be happening here. And this is, again, a longer term perspective, meaning this might not happen for another 2-3 months, something like that. Okay, so really keep this in mind. Okay. The next thing I want to discuss here is that oil might have found a bottom. Okay, might. And I'm not discussing this from like you should buy oil right here or anything like that. I'm just talking about the market in general. Okay. For example, again, the market bottomed in early 2009, right at the same time when oil found a bottom. Okay, so let's take a look at that. All right, so here's oil. This is USO. Now, huge dump, 2008, huge dump. Okay, now when oil started to bottom, you started to see this heavy volume right here. Okay, and again, it took looked like it might have bottomed here, and then it got a bounce, but then it got sold off and made another new low. So that could happen here, but you started to see the early signs of a bounce right here, and that was right around, let's see, December 2008. Okay, December 2008, and this low right here was when its true low was in February. Okay, mid-February, so about a month and a half later. Okay, so again, this isn't about talking about the market's going to bounce today or tomorrow, but just maybe in about a month or 2 months or 3 months, something like that, because we're seeing some early signs that it could be forming some kind of a bottom. Okay, so here's oil, and what you saw is regular volume, boom, boom, boom. But look at this. This was, at the time, the biggest volume we had seen. And where did it happen? Right here at the lows. Okay, right here at the lows. And that's when the most people sold and the most people bought. Right there. That created a low. And what do you know? What just happened? Look at this. This is also several of the highest volume days we've ever seen on oil. And they've happened just recently. Okay, I'll just kind of zoom in here. And you can see these are some of the biggest volume days we've ever seen on oil. This day on, what was this, Thursday? Yeah, Thursday is the biggest volume day ever for oil. Friday was the second biggest. A couple weeks ago, we saw the third biggest, fourth biggest, fifth biggest. Okay, these are some of the biggest volume days ever on oil. And you can see a big pump right here. Now, we saw some news happen over the weekend where the OPEC meeting got extended and that it might not happen until Thursday, and the Saudis and Russia, blah, blah, blah. They may not be making a deal. I'm not going to get into that. I don't really care about it. But I'm just kind of bringing it up because it could mean that oil could head lower here in the short term right there. And I just want to throw that out there because I don't want some idiot coming and saying, oh, you were wrong about oil. Well, I know oil could, again, head lower for sure. But we are seeing early signs of a potential bottoming process, which again could take 1, 2, 3 months, something like that. So that's what we're seeing for oil. We're definitely seeing some potential bottoming signs. All right. So that is oil. The next thing I want to cover is the market has not produced a bottom signal yet. Okay. Now, what I mean by that is, yes, we're seeing some strength in these individual names like Apple, Amazon, oil. Looks like it may be finding some kind of a bottom potentially. But the market can't bottom with these things alone. Okay. They need a lot more stocks to participate in that rally. And they're just not doing that just yet. Market breadth is still pretty bad, okay? You want to see market breadth start to improve, but it's really not improving. It's only kind of staying the same and at times getting even worse, okay? You need a lot more stock. So let's take a look at the chart here for the S&P 500, okay? So I'm just going to kind of zoom in here a little bit. Okay, I have a strategy that I have created based off of 30 years of back testing, going back to before the .com crash, and my strategy has caught every single market bottom out there. Okay, every single market bottom. We've had about 35 market bottoms, and the only one it didn't catch was the initial bottom in 2003. Initial bottom. The market bottomed in 2003 after the .com crash in March. It didn't catch that March signal, but it did catch, I think it was the July signal that continued that move higher. So the only signal it didn't catch was that initial 2003 bottom. But beyond that, 30 other bottoms have happened since then where this signal has caught it. And I'm not going to explain the signal because basically I don't really tell anyone about that signal. It's reserved for myself, and the people that get the benefit of this signal are the people that I manage money for, and of course the people that sign up for my alert service as well. But anyways, what it requires is strength in the S&P 500 as well as the NASDAQ composite. Okay, I'm just putting it super simply. Okay, we have not seen that strength in both the S&P 500 and the NASDAQ composite index. Okay. We have seen a little bit of strength in the S&P 500, but we haven't seen the strength needed in order to initiate a long signal in the NASDAQ composite, okay? So, again, we're still here below that 20-period simple moving average. Yes, we had this bounce right here, but now we have this gap down, okay? We had this move up, and then we have this gap down, and now we've traded sideways. Normally, when you have a move, sideways trading means that it's just pausing before continuing that move. So right now we have this gap down, and right now we're just kind of trading sideways. So in the short term, could see lower. Again, we could see higher too. I'm just saying that we haven't produced a long signal in order to actually put money in the market to get long. Now, that doesn't mean the market can't head higher in the short term. All right, there are a lot of instances of shorter term moves to the upside that happened, in 2008, that happened in 2001, 2002, that were just dead cat bounces, bear market rallies. All right, my signal produces only for major market bottoms that are going to produce, major market moves, okay? Not just little mini bear market rallies, but major market moves. So that's what I'm kind of looking for. I'm not a day trader. I'm not trying to catch every single little move in the market. I'm looking for major moves. We got this major move lower. We profited really nicely. I'll show you some alerts that we've done recently. We've done really well in the last month. Most people are struggling. We're doing well. We caught this down move. My point, going back to my point, is short-term moves could see a move higher. I mean, even into like 2,900, and that'd still be just a bear market rally at that point, unless we saw strength in both the S&P 500 and the NASDAQ. Okay. The other thing I want to mention about my strategy too is that it kept us out of the market for the any failed signals. That's what I'm trying to point. My point is, it didn't have any failed signals in the 2001 or 2002 bear markets or the 2008 bear markets. Okay, so yes, it does have failed signals in lots of other instances, but for those two bear markets, it didn't initiate any signals, winning or losing, for that period of time. Obviously, we do make other trades outside of that signal, but as far as looking for a bottom, those signals have not been initiated just yet. So the next thing I want to share with you is a couple of potential trades. Again, I'm not saying we are in these trades or not in these trades. I don't share any kind of that stuff with anyone other than members here at thetradinganalyst.com or the people that I manage money for at darksky.capital. Okay, it's not darksky.com. It is darksky.capital. That is the site that I use for managing money for other people. So let's take a look at a couple of potential trades. All right, so these are stocks that are showing potential signs of moving. Okay, these are your trades, your responsibility. All right. So what I'm seeing here, I'll just kind of zoom in. Obviously, you can see that, and this is Cheesecake Factory. You can see that this stock is in a downtrend. That's very, very clear. Now, the other thing that I want to point out is that cake is the symbol, Cheesecake Factory, has a lot of volume right here, all right? And we are below those volume days, okay? Because volume can be a sign of a bottom, But what we have here is that cake is below that support, all right? Below that support. So for example, we had this volume, big volume right here. Boom, all right? Next day, red. Here's a gap up on low volume, and then boom, a lot of volume on this day, and it headed lower. Here's another. The biggest volume day was a gap down in green close. Okay, that's bullish, right? Well, it wasn't, because the next day we headed lower, and then we just kind of traded sideways, and now we're below that support. So we are below all of these high volume days. Now, in the opposite way, you would want to be looking for a bounce if cake traded sideways, had all this volume, but then broke out of the upside range. But right now, we didn't do that. We traded sideways, we had all this volume. So what does that mean? That means that a lot of people dumped their shares right here. And now you're seeing where that direction is headed. So we're out of this range. We traded sideways, heavy volume, and now it's below that range. So I think Cheesecake Factory could be heading lower. The other thing that I want to mention too is that, in most situations in a raging bull market, I pretty much ignore fundamentals, okay, because the market tends to disconnect from fundamentals, and that's why everybody that's bearish, they scream, the fundamentals, blah, blah, blah. But they miss out on these huge rallies because the fundamentals don't always line up. Sometimes they go way below value. Sometimes they go way above value. And that's why price action is really king. It's really king because stocks can go a lot lower and a lot higher than what most people think is possible. But with that said, I do want to also point out that Cheesecake Factory has just said, and this is, I think they said this last week, that they're not going to be able to pay rent at any of their locations. All right? And most of their locations have been shut down and are shutting down right now. I think they have like 20% of their stores that are open, but obviously they're doing, to-go orders only. Most people aren't getting Cheesecake Factory. They furloughed and fired most of their employees. Again, they said they're not going to be able to pay rent. That is a bad sign. Okay, that they can't even, this is a huge restaurant chain, and they can't even pay their rent. Anyways, so that is going on as well. All right, and it's very, very simple. Fun. I like to use common sense fundamental analysis. Right now, the country is shut down. The biggest things that are getting hit are retail stores, food, restaurants, stuff like that, and airlines. Which brings me to my next play here that I want you to take a look at, and that is American Airlines. So American Airlines, very similar setup here, all right? Here's that support here, here's that resistance here. So we kind of traded sideways within this range. Now, we had this heavy volume day right here. At this point in time, this was the biggest volume day we've seen in a couple years, all right? Bullish engulfing candle, right? That's bullish, right? Okay, well, no, it wasn't, because we headed higher, got rejected, and headed lower after that, broke that low right there. Okay, we bounced right here. Okay, maybe it's bullish, all right? We have this heavy volume gap up, and then another one right here. But what did it do? It just got rejected at these previous highs right here. And then what do we do after that? We just leaked lower right here. Even as the market didn't retest the March lows, we've got American Airlines that not only retested the March lows, but broke below it. So we have this heavy volume, sideways trading right here, and we're below all of those bullish days right here. Okay, if this was bullish, we would have held this support. Not only that, but we broke these lows and support on another heavy volume day. Okay, this was the third-ish heaviest volume day, so we're breaking that level here on heavy volume. Okay, so my point is that I think that American Airlines is going to head lower. Delta Airlines just announced, and if Delta's announcing this, American Airlines is obviously being affected by this as well. I think the airlines are very connected, especially in times right now. It's not like one airline is doing super good right now, because no one's traveling right now. There's a lot of travel restrictions, and nobody wants to travel because even if they don't care about the virus, like me, I don't want to go travel right now, even though there's crazy deals. And you could fly for basically free, but nothing's open right now. So I don't want to travel to some other country or some other town when literally I would just be like sitting in my hotel room. So anyways, what I was saying is that Delta announced that their revenues or their income, something is down 90%, is going to be down 90% in Q2. And that they're burning like $60 million of cash every single day. They furloughed most of their employees. I had someone who did actually take a flight just this last week, and they said there was only one other person on that flight. Only one other person. That's crazy. And those airlines, they need those seats to be filled in order to make money, and they're essentially losing money by flying right now. Every flight they take, they are losing money because, the cost of fuel is something like, I don't know what it is, but it's thousands and thousands of dollars. I mean, you got two people flying for, $50 each probably. They're losing a lot of money. Anyways, these are the kinds of companies that you want to be shorting right now. You don't want to be shorting tech, because tech, everyone can still kind of use their tech. That's why Zoom is doing so well. That is a trade that we recently took. We capitalized on that bullish move. People are still going to be buying stuff on Amazon. I'm getting stuff from Amazon just like I normally do. So I think that most people are doing that. But people aren't going to restaurants because they're shut down. And people aren't flying because they don't want to travel. So these are the kinds of stocks that you want to be shorting right now, especially after this huge move in this market. I mean, we already dipped 40%. And just to throw out another fact, you know what? Let me discuss bear markets really quick. So really quick, I just wanted to kind of give you guys a picture of bear markets, okay? And what I want you to be focusing on here is down here at the bottom. These three numbers down here at the bottom. So the average bear market without a recession is 29%. Okay, 29%. And just to throw this out there, we did 40% was the March low. That was 40%. The average bear market with a recession is 42%. Okay, so just 2% more than what we already did. That's the average. The average of all bear markets with a recession, without a recession, is 36%. All right, so we're above the average without a recession. We're above the average for all bear markets, and we're just 2% below the average with a recession. Obviously, well, not obviously, but most likely we will be in a recession. So the number here to be keeping an eye out for is this average with a recession, 42%. Obviously, it can get worse or go lower, but most likely it won't go too much lower. Okay, two of the worst bear markets ever were 2000 and 2008. You can see those two right here, 58%, and this was from the high to the very low. Okay, 58% was the financial crisis, and then 51% was the dot-com bubble. So again, we could be looking for one more big flush lower, but at 40%, we're right here, right around the average. So again, yeah, we could head down another 20%, something like that. And that would be, I would not be surprised about that. But once we get that one more big flush, to me, that would signal that we're likely near the end of it. So just to kind of, it's good to know about what's happened in the past and the averages. Obviously, anything could happen. I mean, we could go down 100%, you know, crazy, something like that. You know, the Great Depression down here, 86%. I mean, that's insane. So anything is possible, but, you know, I like to play with, you know, the averages and really keep those things in mind. So I really hope that these facts and figures helped you out. So the last thing that I want to share with you guys is the portfolio tracker here at thetradinganalyst.com. It tracks all of our open position, closed out positions, and stuff like that. I am sharing this video with members and non-members, so I'm not going to share the open positions that we have right now. That is reserved only for paying clients here at thetradinganalyst.com. But I wanted to share the recent alerts we've done in the last month. As you can see, we've done extremely well. You can see the recent ones right here. We did TLT puts, Zoom. We captured that upside move like I discussed earlier. And you can see Guild was biotech move, almost 100% win. We caught the move lower in oil, 64%. These are options trades. You can see we do have some stock trades. Most of the trades are for options, but we do have some stock trades. If you are not a options trader, don't worry, because most of the people that don't trade options that are with our service still trade the stock. So for example, if I alert Zoom calls, what those people will do is they will just buy Zoom, the Zoom stock, the equity. Okay. Same thing with Gilead, Guild. They just buy the stock rather than buying the options. So this service can work for a wide range of people, options traders, stock traders. Essentially, if you're looking to make money on a consistent basis, and especially in a time right now where most people are losing their ass, we're actually doing quite well. And this is right around our average, about what we do normally. We're not just there's some people out there who are bearish throughout, when the market is ripping higher. We do well in both up markets and down markets. And that's just because we have proven strategies and methods that work. I'm at the helm, and I'm staying calm and cool and collected. And this is my full-time job. I not only send out these alerts to my alert subscribers, but I'm also managing money for people. So I'm not just some guy out there that has an alert service that doesn't even trade any real money. I'm doing this full-time, real-time, and I'm doing it extremely successfully. So I encourage you to check out the website, sign up and join if you're not already a member. If you are a member and you're watching this, I encourage you to tell your friends. Most of you, or some of you, have done that, and I really appreciate that. I hope you enjoyed this video. Again, just how the alerts work. We send out these alerts via text message. Anytime there's a buy signal, we send out a buy alert. Anytime there's an exit signal, we send out a exit signal via text message. All of these alerts, the entries and the exits, are both texted out regardless of any situation, whether it's a win or a loss. We always send out the entry or the exit alert, and as you can see, they do quite well. We obviously have plenty of losers, but most of the time our trades do quite well. If you have any questions, please let me know. I look forward to helping you, guide you through the market, and helping you make money. If you're a member, thanks for watching. Thanks for being a member. If you're a non-member, I look forward to having you as a new member and helping you just like I help my current members. I will see you guys next time.